everyone. So this is the first webinar, and it's the 15th of November 2022. Yeah. So last week, Wednesday, the Fed came out and they increased the interest rate of the dollar from 3.25 to 4%. But when you look at the market, it's a whole different story because the dollar has been, what can I say? It's been dropping. Surprise waterfall. And that's not what we would expect, given that an increase in those rates should give the dollar more strength. And as we have seen in the recent past weeks, the dollar has been very strong. So these are, according to me, I don't think these are genuine move. I think these are pullback, and it's across all the major currencies. If you look at gold, gold also, where is gold? Yeah. Now you see this move. These are the monthly chart. Yeah. So since the start of this month, you can see this candle here. It's been rising. The market rarely stops there and reverses. The market rarely stops dead and reverses. So I think before the close of the month, this will be a week to the upside, if I'm not wrong. If it will not be a week, if this is not a week, then we'll have to reanalyze our position on the dollar. Yeah, maybe after all, the dollar has topped out. Yeah? But I highly suspect. Okay, looking at the bonds, we want to know the direction of the dollar. It's good that we look at the bonds, especially the 10-year bond and the 30-year bond for the long-term picture. Now you all know that bond yields they increase when the investors are taking on more risk. When the money is flowing out of the bond market, now the bond yields go up. When investors are nervous and they don't want to take on risk, the money goes into the bonds as a safe haven. Okay, so when you see the yields increasing, it means that the money flow has been out of the bonds into more riskier uh, asset classes like stocks, yeah, some currencies. So since the beginning of this March 2020, since here, this is when we'll be doing most of our analysis based on this point, this trend starting on March 2020. There we go. Now you can see that from 0.3 up to it was 4.3, 4%. Yeah. So the money has been going out of the bonds into stocks, into commodities, yeah, into risk currencies, yeah, safe haven currencies like the yen, they have been becoming weaker. So generally speaking, and looking at the central banks, they have been coming out more strongly and tightening the rates just to catch up with this market. You see, when the bond yields increase, okay, bond yields increase for two reasons. First, they increase when the money is moving out of the bonds into more riskier assets. Secondly, bond yields can increase when the interest rates increase. So from this point here, yeah, investors have been removing their money out of the bonds and buying stocks. And we've seen this, the Fed, the Bank of Japan, the Bank of England, Bank of Canada, they have been coming out and increasing the interest rates. Yeah. So last week, Wednesday, the Fed increased the rates from 3.25 to I think 4%, 0.75 basis points. And we would expect that since bond yields also increase with the increase in interest rates, we would expect that this is just a pullback, yeah, and the yields will have to increase to catch up, yeah. As you can see, it's 3.8 now, 0.2 down from where it was actually around 4.3, and the time it was here, it was let's look at the daily chart. So this was on 21st of October, even before even before the Fed increased the rates to 4%. So at this point here, the interest rate of the dollar was 3.25. Okay, and the bond yields for the 10-year bond was 4.3. Yeah, a whole 1 point basis. Yeah, 1.0. And the Fed increased the interest rates around this date. Yeah. So the Fed or even the other central banks, they have not come out and said that now they will be looking to cut interest rates. So we can say that for the foreseeable future, yeah, these rates are going to go up. Okay. So if these rates are going to go up, the bond yields will automatically have to go up. Okay, okay. And when that happens, now the dollar will be strong again. We will see the monthly candles like what is Euro USD. Yeah, see this move. We'll see all these week down. GBP USD same case. Yeah, so they will be retesting this support here. Okay, so moment. Yeah. So there is a likelihood of more increase in the interest rates. So the bond market will still continue. The yields will continue to go up. Okay. So we've not really, the market has not turned. That's why I think that it's just a pullback. And for the DXY, you look at the monthly chart. Let's look at the weekly chart. Uh, okay, we have as a previous resistance around this point here. Let me highlight it. Okay. So we have a previous resistance here. It is around 1.3, 1.4, and this is where I think will be turning for the dollar. I think we are testing the broken resistance. Yeah. For the long term, my take is that as long as the bond yields increase, yeah, and as long as the Fed does not come out and cut the rates or maintain the previous rates, I think the dollar will continue, yeah, being strong. So this pullback here is what I'm anticipating. And the best time for this price action to happen is before the close of the monthly candle, the November monthly candle, because uh, when the price closes below here, then we'll have no wick in the Euro USD, GBP USD, gold. But when the market tests these broken resistance and the dollar starts rising again, you will see these the Euro USD, the GBP USD falling, gold, yeah, falling. So these what I'm expecting for this week, yeah. We will look at WIT's volatility index, yeah. It's uh, it's been falling, it's been dropping, which means that uh, generally when the volatility index is rising, it means that the there is the investors are nervous. Yeah. So the money flow will be into the bonds, into risk of currencies like the yen. But when the wheat is falling, generally at around 10 or 12, 11 here. Now this one everybody is buying stocks. Okay. And now this one we are most likely to see that the market turning now and the stocks falling, the money going to bonds. Yeah. Now, as the bit rises, now at around again this point here, 50, 47. Now, the risk, the investors now will be ready to take on more risk. So, as you can see, the bit has been falling, yeah, the last 2 months, and I think we're headed down here. By the time you're here, I think the stocks will be up, yeah, the yields will be up, and the dollar will be up. Okay. So for this month, I think the best trades to wait out for the gold. First of all, there is a gold. Yeah, I think this month, I think this is the sellers will take over once the price becomes suitable for selling. I think it's almost there. Uh, GU same case and the EU same case. What about Bitcoin? Yeah, I think. if the dollar goes to, because I'm anticipating the dollar to go to around 120. Yeah, I think we should wait for Bitcoin at around yeah 10,000 around here, and I wait for some consolidation. But for now, I think it's best to just watch. Okay, so these stocks stocks are rising. Yeah, investors are taking on more risk. They are taking their money out of the bonds and investing into riskier assets. Why is the US data? Dow Jones, it's been advancing. Yeah. So clearly, the investors are taking on more risk. The money is not into bonds. That's why the bond yields are rising. Okay. And I think that's it for today. Gold. I think I'll be updating the charts. I'll be sending the charts soon. But let's watch gold. Let's watch uh, USD and GBP. Yeah. So I'll be updating the chat and updating you. Okay. I'll also be posting this video on YouTube. Yeah. So just you know subscribe so that you can get future updates when I post. Okay. Yeah. So for the DXY, let's wait. For now, let's wait for the market at around this zone before taking any dollar trades. Yeah, I have very few rules, but one of them is that before taking any dollar trades, I have to look at the DXY. It will save you. It will save you a lot. Okay. So I'll be publishing another video soon, and I will get it on my YouTube channel.